meeting is being recorded.
Whoa.
Whoa.
Give us a little warning next time for that. All right, let me share my screen.
Yeah, you're good.
Share it.
Yeah.
All right, we good? Can you see my stuff?
Yes.
All right, so we got that puke off the open, and we see that moved down to 387 or whatever it is. We look on the daily chart at that point. The 8-day moving average. Let me get an 8-day up. 9-day, 8-day, use a 10-day. It's all the same shit, honestly. It's
You can change it right there if you want. The period's right
no,
there.
but I'm saying, like, I know a lot of people
Yeah.
use 8, 9, 10. It's really the same difference to me.
Yeah.
It's just we always use 8-day at the firm, so I use 8-day. So at this point, 385. The 8-day is now $20 higher. What's that? 20 divided by 4, 5% higher. We're going to have a reactionary move to that at some point. So we put in the low, this 386. I buy some myself, take a shot at 390 if we see some. It comes in, dips, and that dip is just primarily to suck shorts in. It's like, everyone sees we take out market highs and then we immediately start heading to lows. The novice trader is going to say, oh, we're getting that move back again. The second we hold these lows, this is when I get the big ad. This is the big ad. And you have to give everything to low a day. The sneaky ads and stuff like that aren't going to work because you see how choppy it is. So, I buy some there. I'm getting some off 392, 393. We hold these lows. At this point, when we hold this final low, I move 80% of my stop to right here. And then, we push up and I'm just still trimming. Yes, I took off a bunch before the top, but, now looking back on it, it's a good exit. The reason I was looking at 394, 395 is because we tried to bounce that area yesterday, and that's where the high volume selling came, these 394, 396 area, 395, whatever. We have this right here, these lows. So that's the first previous resistance area. And if I'm not, if I don't think the major market bounce is going to happen yet, then we got to be looking at previous areas to sell. So I think we got to continue puking, but there's definitely advantages, to these type of markets if you can be in and out. So, it's tough to buy strength. Even if you're entering here, it's still tough off this 391. So you got to go into the day with kind of theses, and, you have to look to buy off the bottoms if you're going to buy. And if you're looking to short, you have to look to short into the strength. Even if you try to short weakness, what are you going to short? These new lows, there's not a lot of upside there. The move already happened. And so even if you're looking to buy the market, you got to look to buy the dips. You got to look where we hold, because you have to give it to these areas. You have to be able to give it to the lows. So that was really it. That's the trade. In and out. Got out nicely. Got out fully at 394. It looks like the right decision at this point. So that's all I got in that regard. I don't know. Any questions?
Are your kicks, like, are all those even amounts of shares? Like, is it all the same amount of shares, or are you?
So I bought 1,700. I took off 300. No, I took off 200 here. Then I took 300, 400 off. So now I have 1,300. It starts putting in this area, and I'm moving a big portion of my trade to break even at this point right here. I'm about giving half to this area, half to lows. So then we push off. I start to get a little nervous, honestly, when we start pulling in that quickly. So then when we put in that pivot, that's why I take off 200 more here. So I'm down to 1,100. Down to 1,000, down to 900, 800, 700, 600, 500, 400, 300, and then finally I'm out of the trade there.
Mm-hmm. Okay. So overall, you're sort of just kicking it in almost like 20.
I'm trimming. Yeah, I'm trying to get like a first third off into that first strength, into this area, because I know it's not going to go straight up. I need some sort of consolidation. It did just move 387 to 394 in about, what is that, 20 minutes? So, you got to be realistic. We got that nice move, book some P&L. So, you can handle the pullbacks, but, you see, I'm just looking to take it off into strength here. The tough part is when we do get that big market bounce, it's like, what do you hold? What do you kick into strength? What do you hold? That's the tough part. And if we do get it, I'd still probably try to take off one half my position into that strength and then swing half. And I feel like you got to have kind of these decisions made beforehand of, let's say it does work out in my favor. How much do I want to hold? You know, so I completely was thinking we don't get the big bounce today, but I thought, you know, I'm just trading the market ranges at this point. So we get the bounce off lows. I kick some into strength, and you see I'm fully out here because my thesis is we're not getting the big bounce today. If we pivot here and we go right up to 410, yeah, that sucks. And you know, I was a little bit wrong in my thesis, but you know, that's not what happened today. But in the future, we get these big pukes. We'll see. I'm probably going to try to hold like a third if we get down to 380 SPY and then see the big bounce. That's just my thinking. You know, I'm just going off big market levels. Everything can change with new information and stuff. That's all I got on that. What you guys got for me?
Jake, I got a quick question.
Okay, what's up, baby? What's up, Mo? How you living? Little lunch walk? Love it.
Yeah, you know, drowning in work, but figured I'd jump on this. You said that 5%. You said that 5% pivot point, or no, back to yesterday's highs. Like, what made you? Why was that 5% so significant?
What are we talking about? 5%.
I think you said we were down 5% to lows.
5%
Like
off the 8-day.
Yeah. When you said it has to retest that high at some point,
Oh,
go back to that.
It's just market dynamics. I think we're going to retest that as another area, even if we fail from there. It's just like, yes, we can. You know, the market can remain oversold forever, but you know, realistically, I think we do get a bounce to more levels, even if it's, you know, another failure. It's just like we got to retest resistance at some point.
Okay.
That's really more of the thinking.
Yeah, and that was part of your thesis. So all right, I'm following you. I'm with you.
Yeah.
No, appreciate that.
And we're still like, look at us now. We're dumping down another 1.5%. Like, you know, we're still very, very oversold. But now the difference now. So yesterday, it seemed like a lot of people were thinking that inflation comes in soft, and then that's the bounce. What the thing I keep like relearning is when you see a lot of people with these same ideas, like that's, you know, it's more of like smoking on that hopium, you know. It's like that's what I want to see happen versus what's realistic to happen. You know, the inflation number, it came in a little bit higher than we expected, but still soft month over month. I guess that's somewhat good news, but you know, for everyone to want the bottom to be perfect on that news, you know, off that pivot, off that. Oh, what's up, baby? What's up, Joe? How you living?
What up?
For all of us. But all I'm saying is, like, if you look at the bottoms, let me share my screen again. So even you look at that bottom, we were talking about 2018 SPY. All right, even you look at the 2020 bottom, it's like, it's not going to look easy. It's not going to be a perfect hammer that, you know, we want to buy. It looks disgusting the day before. And then, you know, that's when we start the launch pad. You go back to 2018 and it's like, look how we closed. Like, look at this market close the day before.
Yeah.
It's like that. This is one of those candles that's like, holy shit, is the market going to zero? And then look what happens. It takes out the low by a little bit, and that's when the buying comes in. Bennett, I remember you bought those highs and you traded this pretty fucking well. Right there. But that's the sort of thing I'm thinking, is that like, if it looks like it's going to be a bottom, it's probably not a bottom, because it's just, they make this as difficult as they can. You know, it's really as simple as that. If you see like my mistake, I think with the Fed was that it would have been too logical for them to give us a third 6% bounce on the Fed number, because we're all looking for it. You know, everyone wants that. Everyone's looking for this bounce at this point. We're oversold, all of this, you know, and they're just going to make it difficult. That's really my thinking on it. When like we see like the market puking, where everyone's like, holy shit, like Jesus Christ, you know. Right now it's a puke, but it's not like a Jesus Christ, we're going to zero puke. Where SPY's might be down 20%, might be just down 20%. So, you know, I think when we have that true capitulation where we're seeing no one try to buy that bottom, that's when it happens, you know.
Yeah, I agree.
So Joe, what you been doing over there? I haven't heard from you much. You're sitting in cash, living it up.
I actually have, because I did the career switch. So we switched places. You're in SoCal, and I'm in Denver now.
I'm
And
in
so
Brooklyn, baby.
I started with the wealth management firm. And so I'm like still finishing up my licensing. And so I have some like small buy stops in for the IRAs, but in the trading account, all cash.
Smart man.
Since November, called it.
What I said.
We were all just saying like, all right, big support getting taken out in the indices back in November. And I mean, I've taken a couple of paper cuts in the short term here and there, but it's been super nice just kind of like checking in. I'm like, all right, market still sucks, back to work. And then I do my chart scans at the end of the day. And I have some consumer staples and healthcare like orders out there, like PG and STZ and TRV, but like insurance names, nothing sexy, but.
All right. I mean, those are names that are winning right now.
Yeah, sounds sexier than Peloton.
Yeah,
this is true.
Oh, Eric had a question here. He's looking at TFE. I know he's been trying to short this one. Says, is it too tricky of a trade here? My stop is holding, so the game plan is working, but I'm not sure if I should add to it or cut some ads.
He's short.
Yeah.
I mean, the market's been puking every day, and this thing isn't breaking down yet. It's tough. It's tough because from what we've seen, it's like, we look at, here, let me get my screen share.
Mm-hmm.
So, we look at Apple, and that was like, it was the relative strength god until it wasn't, so is that what we should expect from PFE? It's tough to say. Right now, it's not breaking down at all. So I don't know. It's just, it's in the middle of support and resistance right now.
Mm-hmm.
I have no position, so I'm not sure if it's a short or a long. But, let's say the market does pivot. This 50-25 looks like a good area to break out. But I mean, I think you respect your stops. And if you see any constructive action for your trade, you see it fail and take out these lows, maybe add, but you don't need to, over add right now because it's the strongest name in the market.
Yeah, I agree. I mean, I would just wait for more confirmation because like you said, it's holding up while the market's coming down. And then it's like that decision of like, well, is this relative strength or is this just one of like the last laggards to actually fall off?
Right.
So I would just say keep the position as you have it right now and like wait for that true confirmation, like maybe a possible rejection of this area again and really like heavy volume to the downside that you can maybe look to add. But I mean, overall, like you said, if the market finds some strength, this looks like it's going to go higher. But Eric, you have a pretty low risk trade here. So the RR is there. I mean, if I think if it breaks that 51 level, it's probably going higher and just stick to the GP.
Yeah, I'm with that. What else you guys got? What is everyone's kind of thoughts on like what the market is going to look like or bottom looks like? Some, give me some other voices besides my own. I want to hear some takes.
Jake, this reminds me of like 2013, 2014, where
what are you doing, Mo?
AMD was at like
doing a marathon.
I'm doing a 5K right now. How you guys doing? Yeah, I'm just doing my laps. But no, remember like AMD was at like $10, $12, BAC at $8, $10. And I remember this was like maybe 6 months before even signing up with you guys. Like I was trying to scalp BAC for, 5 cents every day and it would only move like 15 cents. And just names were just destroyed. So in my mind, I was like, all right, is this the cycle going back to what that, like, if we get more selling, that's the environment I'm envisioning. And that's all I can think of is, that post 2008 crisis. Like if we really get some heavy selling in, because yesterday we were talking about it in the chat, we're seeing some of these names are just fucking destroyed. Like, I know we mentioned Peloton, Trifago, Fubo, UPST, SoFi, like all these names, Coin, like
Even
these names are trading.
Shopify even.
Yeah, so it's like this is already kind of happening. American Airlines back to $15. We saw COVID, ramp up, and now it's back down. So that environment is all I can think of. The post 2008, where the range in names became so much shorter. At least right now, the thing is, yeah, there's a lot of selling, but there's some fucking range in some names. So
yeah, definitely.
That's all I can think of.
definitely intraday advantages to that.
Yeah, for sure.
Shake, for some of these, like the names that we know their cash flow is strong, like Apple, Microsoft, like Thermo Fisher, some of these like mega cap, almost like no longer growth names that are kind of finally starting to break through those support lows. Do you think like they were trying to hold up so strong and it feels like, or at least fundamentally, it feels like they kind of just getting thrown out with the ETFs and the mutual funds that are just kind of dumping the baskets as they keep getting redemption orders? Are you going to be looking to those names when we do start to bounce back, or is it just strictly just following whatever the leaders are at that point in time?
So we're just seeing, so what we're seeing right now, or at least in my eyes, is just like a risk reduction across the board. No matter how good a company's earnings have been, they're just getting taken out to the woodshed. Like UPST had a really nice earnings report. They had soft guidance, but they're down 40% on that earnings. So it's like right now, it's just the market's punishing anything, you know? And then you pull up a monthly chart on these names when we had the Fed, you know, just buying, injecting liquidity into the market, and then they want to take it away. They want to rip the Band-Aid off, you know, as quickly as possible to tame inflation. I don't think these names have to hold up no matter how good those earnings are. People need cash. They need cash. Once liquidity dries up, it dries up. So, I think it's going to take a while for a lot of these names to come back. I don't think it's a V bottom. I don't think anything like that. I think this is going to be something we haven't really seen before since, I don't want to say like 2008 or anything like that, it crashed, but there's no reason to think that we're just going to bounce back, because realistically, this thing is kind of just getting started. We just saw the first 50-point rate hike. They're thinking it's going to be 50 points or more every rate hike. So then you look at the outward effects of what is going to happen from that. There's no way to think that we can avoid a recession. I mean, I just don't see there's any way of doing it. And we're already seeing the housing market soften with, if you look at mortgage demand and things like that, mortgage rates are skyrocketing. We're starting to see the demand in housing, come in. So it's just, I think we're at the beginning of this thing. It's going to be a wild market ride. It's not like we're going to go straight down. We're going to go down, up, down, up, down. But I just think we're in for a wild ride like we haven't really seen before. We've got another 7 months of the Fed definitely raising rates. So, it's going to be this environment for a little bit is what I'm thinking. So, what my plan is for long-term accounts, I'm not looking individual names as much. I'm just going SPY more so. Because, it's just much more controlled risk. Because, for example, it's like, energy's strong, been holding the market up. So maybe I want some exposure there, buy the SPY. I don't want to be for my account, for my long-term account. I don't want to really be a stock picker like that based on valuations and, company earnings and things like that. That's not the environment we're in. If it was, the growth stock mania that we were seeing, where it's like, oh, this company had 500% sales growth, that's when I want to be a stock picker. I don't really want to do the whole valuation game on the way down. I trust in the market, the American economy as a whole. So S&P 500, not even the Qs really, because I think tech could, stumble for the next few years in this rate climbing environment. So S&P over Qs for me in the long-term account, but I don't really want to do individual names.
Dude, something I've come across just on my new job is reviewing a lot of people's 401ks and what their like options are. Did you know that most of those target date funds have like at least 20 to 30% foreign exposure, like Asia markets and like Eastern European markets? So that's why so many people's 401ks are getting wrecked, is because of all that foreign exposure that's built into these target date safe funds.
Right. Yeah. Risk management is, having a little risk in everything across the board until, we see this risk reduction event like we're seeing, and where everything gets taken out to woodshed. And then the foreign names, which are like 3 times risk, they don't have the U.S. government backing them. That's where you're going to experience some real pain. And if you look at all the European economies, it's funny because it's like the economies are, if they're closer to Russia right now, they're feeling more pain. So China's feeling the most pain, and then UK is feeling the least amount of pain in Europe. It's because everything's in relation to the supply chain from Russia. So it's like, and now we're the furthest away from Russia. We are, on our own terms here. So, S&P 500 is the way to go if you're asking me.
Agreed. I think the U.S. is overall stronger than Europe as a whole, outside of like the UK and kind of Western Europe, and then obviously Asia. I think the US is kind of the strongest right now.
Completely. We don't have to depend on those countries as much. We do have to depend on Russia for oil and energy and things like that, but not as much as European countries. So that's like there. Just those markets are fucked. The dollar is ripping. Good time to travel right now, folks.
Where are we going?
Fucking Europe. Somewhere in Europe.
Dude, Europe sucks.
Says the French guy.
Exactly. Take it from me. I know. No, but so I mean, Sheikh, I'm obviously getting a bunch of people that don't trade that hit me up. They're like, "What do I do? Like, what's the best thing for me to do right now?" I'm sure you're getting those texts and calls too. So what are you telling people?
I mean, they're all like, person by person examples. It depends what they have going on. If they're sitting on a lot of cash, I would recommend dollar cost averaging the SPY every month for the next 7 months. That's my plan. We dropped 25% more in the SPY. I'm still going to be buying it. That's really like the broadness of what I've been instructing people to do is like, if you have a very long-term outlook, this is the time to be buying. Even if we have 8 months of pressure more, even if we see 20% more downside, in 2-3 years, that's when it's going to be, the smartest buy you ever had. So if you have that long-term outlook, then keep that long-term outlook and slowly unload that account. But realistically, you have to think that we do have months and months and months more of this. So it's not like buy all SPY you can right here. Just let one of the 6 bullets go right here. That's kind of what I'm doing.
Yeah, that's what I've been advising people too. They don't like that answer.
Well, yeah, they want to make 100% in 2 weeks.
Yeah, they're like, no. What can I buy right now? You'll double my account in a week. I'm like, yeah, well, not gonna happen. But good. Anybody else have some more questions? There's some people in here.
Good. Can I chime in?
Of course, man. What's up?
Yeah. Haven't been super active lately, but it's pretty evident of the inflation that's going on. So I kind of wanted to just get your insight of what the inflation will look like relative to everything that we're looking at. Because as the dollar gets weaker, and the stocks are going down, how do you think that's going to affect, with everything else going on?
Well, right now, so I mean, we got some great information out of the Fed in the last meeting where they're like, all right, we're not going to do these 75 basis point hikes. And the first reaction, the market liked it. But then when the real reaction comes in, the market hated it. The market, which tells us the market's main concern right now is curbing inflation. So the Fed might have to do one of those 75-point raises there. So we'll see, in my eyes, we see the Fed just try to curb inflation as hard as they can over the next 6 months. We're going to see one of the fastest rate hiking tapers of all time. So I think we see inflation continue to be an issue for the next 3 months, 4 months, 5 months. But it's tough to kind of predict the situation after that because no one knows what's going to happen with Russia and that sort of thing. Yes, we were dealing with supply constraints and all that stuff before, but then the Russia-Ukraine stuff happened, and then that ramped it up tenfold. So if we see something like that end, that changes everything. So it's like it's tough to have these hardcore predictions because there's so much open air stuff that we don't know right now. I kind of answer that. I don't know.
Yeah, I did. Thanks.
I feel like people love applying percentages to like, oh, there's a 10% chance Russia escalates. There's a 20% chance full-blown recession. It's like everything's different. Like, yes, we've always seen something like it before, but dude, who knows?
Yeah. So, I mean, the reason I kind of switched my stance into thinking that we definitely have to have a recession is because I started digging into what Powell was saying. And he was like, if we can have the pace of, he was pretty much signaling to corporations to slow their hiring. He just kept talking about hiring. So effectively, he wants companies to slow down, right? Like his hidden message in there is that like, I want you guys to stop hiring, stop growing so that we can slow this economy down so that we can curb inflation, which is really, I have to take this fucking economy down, right? Like that's the only, so if you look at Volcker in the 80s, 70s, 80s, he was like a demon to the markets because they had inflation way worse than we did. And, his only option was to just hike interest rates aggressively to curb it. And what did it do? It tanked the market, but it helped the overall economy in the long run. the 80s were great in the stock market after they got that initial, panic shock out of the way. And that's kind of what I think we see, the next 2 years suck or however long it is. Then we get all this inflation curve. Then it's back to, this broad, 10-year uptrend. I think we have another one of those after all this is done. So now it's just, keeping your cash ready for that, in my eyes.
I agree with you, Shake. So, I mean, for those that want to like still continue to navigate this market, but haven't really had the experience of doing it, Shake, I'm just a swing trader. I've never really done sporting or intraday trading. Like, what are your like top tips for those type of people that want to start practicing that? Or
So, I mean, you have to have a thesis of what you think is going to happen, and you can't be chasing moves. You can't chase a long, you can't chase a short. And then when things are starting, like 295 SPY today, I didn't have much stock left, and I'm just like selling. And there's this little thought in the back of my brain that's like, fuck, what if this is the bottom? But you can't, the second you start thinking that shit, it's time to sell,
Yeah.
So it's like you almost gotta just take your winners as they come. You can't go for home runs right now. You just gotta take, the 2-to-1 winners intraday if you get there. And then if you're looking to buy, you gotta look to buy reversals at the bottom of the intraday. You can't look to chase highs or buy new highs and stuff, because even in the SPY today, I don't know what the numbers were. If you let me bring this chart up real quick. If you did buy the new highs in the SPY, 392, you did get 4 points of upside, but you had to give it to what, 387?
Yeah.
So, you're risking $5 to make 4, and that's if you trade it perfectly. So if you're chasing those highs, it's not a good trade. If you're buying off the lows, it's a good trade. Even shorting, if you're shorting off the highs, it's a good trade. If you're shorting the lows, it's not a great trade, unless we see, disasters and collapses like we saw yesterday. But it's hard to try to short new lows every day, in my opinion.
Yeah, I agree. And I think that's like, so obviously strategy wise, things have to be very different, but also psychologically it has to be really different too, because like you said, you have to kind of short tops and go long at the bottom. But you also have to understand that when you're doing that, you're going to get you're going to be wrong way more often.
Yeah.
Like you're going to get shaken out of stuff, and you're going to take small losses over and over and over again to get that one trade that's going to pay off for all of them. But you get beat up in the meantime. So it's pretty exhausting.
Yeah.
I mean, comparing it to swing trading, it's like you're doing a lot more work. You can't go as heavy as you usually do when you're swinging. So you're playing smaller and doing more work. It's a more stressful environment, and you have to be used to taking those little losses and accepting those losses, because that's the other thing is like people will kind of lower their stop and lower their stop and lower their stop until they're right. But unfortunately, the market does what it wants, and it'll just smoke you, and then you're kind of stuck in a trade that you didn't want to be in.
No, I mean that's what I was trying to say in the chart talk yesterday. It's like, 10 seconds remaining. Let me get the start off then.
Go.
What I was trying to say in the chart talk, it's like, yeah, day trading, it can be lucrative if you're good, but it's hard. You got